Hello everyone. When we want to close our open position at a particular price, then we need to specify this stop loss price at which our order will get executed. Is the above statement confusing? Well, let us understand this by taking an example. When you buy say ITC Limited at a price of rupees 280, and then you can put a stop loss of say rupees 260. So that if there is any terrible fall in this stock due to any news, then your position will be closed at rupees 260 by limiting your loss to be rupees 20 only. Now if you hadn't put a stop loss at rupees 260, then you could have incurred unlimited losses. So this is the magic of stop loss order. You should generally place stop loss price at the low of the most recent candlestick when you are buying the stock, and place stop loss price at the high of the most recent candlestick when you are selling the stock. So let us discuss some more ways of determining stop loss levels. The first one is the percentage method. So what you can do here, you can put a stop loss through the method of percentage. Suppose you can take a stop loss of 10% depending on your risk appetite. Then you can place a stop loss at 10% lower than the purchase price. So next, now we'll talk about is support levels. Support levels can also be used to determine stop loss levels. Here you can see that in the case of weekly charts of State Bank of India, we can place stop loss at 235 support level. Now if this level is broken, then our buy order will be closed at rupees 235. Next, we'll talk about through technical indicators. A technical indicator can be itself used to determine stop loss levels, such as, now the first is, if using moving average, you can place stop loss below the longer period moving average than the shorter period moving average. So here if you can see on the chart of State Bank of India, we have placed a stop loss at the low of 20 moving average, which is the lower period in this setup. Next we will talk about Fibonacci retracement levels. Now Fibonacci retracement levels can also be used to determine the stop loss level. From the daily chart of ICICI Bank, if you see here, we can see how the levels of 400 and 370 are important. Therefore, we can put a stop loss at those levels. Although these are some of the ways of putting stop loss for your trades, but a trader should put stop loss price according to his own trading strategy and setup. You should always use stop loss in a proper place and not at random places for each trade. You should always have a trading plan which consists of the entering price, the exit price and the stop loss price most importantly. Keep your trade very simple and trade in the ongoing direction. Have a stop loss strategy which gives you enough space for little fluctuations in prices. Thank you for watching the video.
Investment in the securities market are subject to market risks. Read all the related documents carefully before investing. Such representations are not indicative of future results.